All right, everybody, let's review January of 2022 uh, positions, and I will explain exactly what happened, why it was an entry, and I will comment on the progress of the trade itself. So January itself on GBP AUD in 2022 generated 15%. So let's go ahead and let's take a look at all of the trades. So I believe I will go on the after positions only because this simply shows the fully completed trade, and I can explain it faster rather than going before and after. So we had this long position and we had a successful long position with all the full take profit achieved. Let me go through the reasoning why. So we had a session high and session low. London session opened right here. We had some slow upside movement all the way till pretty much mid London session. And then right here with this candle and this candle, we had a breakout above the session high, which means that we closed above the Asian session high with a body closure. That's a retest, that's a retest, that's another retest. If you wonder if it's a short position signal, no, it's not, because we are not closed below both of the EMAs. So when we got this next strong green bullish candle, this is our long position entry. Why? First of all, it's above both of the EMAs. Second of all, it's a strong, nice, bullish candlestick. And lastly, it came after a break retest of the Asian session high. So we had a break, we had some candlesticks of indecisive, basically called the retest, and then continuation. We broke, we slowed down, and we pushed back above. This is our entry. All three sections are achieved. And what happened? It showed a few candlesticks of consolidation, and then boom, coming towards the US session, it started to accelerate and actually achieved our take profit. Nicely done. Next trade. This one I believe is a it would be a break-even trade. What happened here? Once again, we have the session high, session low. The moment after London session opened, it right away went straight to retest the session high. Now, as you can see, this is not a breakout because we haven't closed above the session high. Next candlestick showed a massive red bearish candle. As you can see, it retested the session high once again, showed a strong red bearish candle, number 2, and number 3, it closed below both of the EMAs, which means that all three rules are achieved. So we rejected the high, we closed below both of the EMAs, and we had a strong selling red candle. So it's a good short position. So what happened then? It's been a pretty slow day. It moved aggressively down for the first few hours. Then it stopped, showed some messy price action, consolidation, sideways movement, and decided to reverse, coming into the US session. So right here, you were pretty close to your take profit. But if you apply this rule that you move your stop loss to break even after the halfway is achieved till your take profit, then right here this candle would actually trigger your stop loss and you would be on a break even. So you haven't made money, you haven't lost money. But if you don't apply this rule, then eventually it may actually be a stop loss even. Yeah, I mean, some people may say that when you see this consolidation, you are able to close the position manually. Yes, you can, but in my management system, I don't. I usually keep the position running to fulfill either the full target or stop loss, unless it's the end of US session, and then I have to close it manually. So it would be a break-even trade. Next up, we had another take profit. So what happened here? Once again, we have a session low, a session high. We had a breakout above the session high. As you can see, it's a clear, strong breakout, a closed highly above the session high with a body closure. Then we had like an hour or two of consolidation. We had some bearishness, and this candle right here is a tricky one because it may be a potential short signal. The reason why I just wasn't convinced too much is because it's the very first candlestick after many candlesticks above the session high. So it just naturally, it's like a human instinct that I was not convinced by too much. It just happened. I mean, this is a fairly valid short position, but I wouldn't take it. And the only reason is because if all of this mess right here would have taken place below the session high right here, and then we had this candlestick below the EMAs after the rejection, etc., then yeah, it would make sense. Now, after we had this strong breakout, then a bit of consolidation still above the session high, it tells me that a bullish continuation is more highly possible to continue. And this bearish candle can be like a simple, a tricky signal, okay? So once again, just not to confuse you, if all of this mess right here, this consolidation, would have happened below the session high, then it's okay. In this case, I was not convinced. And happily, I was right, because two more candles after, we had this bullish candlestick back above the session high, number one, back above the EMAs, number two, and a fairly nice strong green candle. So all three achieved, and this is the long entry. So what happened then? I believe this candlestick that actually pushed massively higher was due to some kind of a news, maybe fundamental release or something, because I don't care about the fundamentals. I don't look at the calendars. I just don't need them. Actually, I just trade by the strategy, and that's it. So, so this candlestick is most likely due to some sort of a fundamental release that was in our favor this time. So yeah, but it's just a pretty tricky conditions, okay? Because it just depends. We are not a robots, we are humans. So sometimes this natural instinct, I remember this, that it just happens that you are not convinced that this is a valid short entry. And if you don't feel like it, it's okay. Just skip it. Just see, wait for the next candlestick. Maybe you will get the better entry. In this case, I was saved from a stop loss and a very aggressive stop loss, yeah, because this candlestick was massive. So yeah, it's just, I mean, happens sometimes. So nothing to worry about. Next trade, once again, a fairly nice take profit, and also an important lesson right here, because I don't usually take these trades unless I already have some profits banked. And let me explain you why, because this may seem like a perfect entry, but it's not super perfect, okay? So first of all, we do have the session high, session low, all good. London session opened. It showed a bit of an indecisive movement, some upside, some downside, and finally we saw the first retest of the session low. Next candle, another retest and rejection of the session low because we haven't closed below the session low, so we are still above it, so it's a rejection, not a breakout. And then the next candlestick showed a nice strong bullish candle. It closed above the EMAs, and it was after the session low retest. But the slight problem with such setup would be that this entry candlestick isn't actually touching the session low or high. I mean, it if this would be like vice versa, like a short position. So it's in a way a valid entry, but I would take these trades only if I already made some capital, some profits, and I can afford taking this a bit of a higher risk position, because in case I lost this 1%, I'm still up like a 5 or whatever percent. If I had two successful trades before, so I can afford to have a loss on this one, yeah. But if this would be my first position of the week, I wouldn't take it, because ideally you would like this candle to be above the EMAs, to be nice strong green candle, and to be retesting the session low or high, yeah. Because this candlestick is, yes, it came straight after this very nice candle, but the entry candle itself isn't touching or is not super near the session low. So this is it's a valid entry, but it's a bit of a more like higher risk entry. So I would recommend taking this trade only when you can afford to take a loss. And once again, let's say a trading gods, yeah, was in my side, and this was a successful trade. But sometimes, and to be honest, usually these trades are not as successful as this one, yeah. So once again, it's a profit, it's good, but the entry is not among the greatest, okay. Next up, we had a loss, and this is a very quick loss, yeah. As you can see, even though the setup looks amazing, it's been a fairly quick and painful position to see, yeah. So what happened? Once again, we had the session low, we had a session high, London session opened, a few candlesticks, we are already retesting the session high. We had some retest, it's actually a breakout, but it's super minor, super minimal breakout. And then boom, this strong red rejection. So all three aspects, all three elements are achieved. A big, strong red candlestick. It closed below both of the EMAs with a nice body closure, and it came straight after a rejection of the session high. So this candle is rejecting, is below EMAs. It's a nice, strong red candle. It's a great short entry. Stop loss just a bit above the session, just a bit above the entry candle high in this case. And what happened, next few candlesticks, boom, spike, took me out. It's a loss, a minus 1%. All good, always happens. I mean, there is nothing to worry about. It's just one of those trades that you have to also analyze. Next up, it's another take profit, yeah. So what happened here? Once again, because we already had a pretty successful month, quite a few take profits. So I actually took a risk on this one, and it paid off. I was pretty close to being stopped out, but fundamental news, I believe, helped me on this one. We had a session low, session high. Session high was retested multiple times, as you can see. So this was a very nice and clear retest. This was a pretty candlestick about nothing, and then boom, this strong red candle below the EMAs, and after the session retest, but the entry candle itself is not retesting the session high in this case. So it's the same setup that I explained before. It's a risky entry. It's a possible entry, but it's not always the best. So if you can afford to take this 1% loss, and it won't hurt you too much because you already made like a decent profit on the week or the month, take it. But if you are just getting started, your first few trades of the week, then I would skip this one, even though it played out super nicely. As you can see, it played out super nicely. But yeah, it just happens sometimes. So it came back quite a bit. I was pretty close to a stop loss, and then boom, fundamental news, most likely, because these big candlesticks within the US session usually forms because of the fundamental news. So it just melted all the way to the take profit zone. So yeah, that's another trade. Next one, it's a loss. What happened here? We have session high, session low. First few candlesticks, we had a breakout below the session low. Next candle, a bit of a bearishness, then a rejection came back above the session low, but nothing interesting because we are not above the EMAs. It's a not super strong, nice green candle, so there was no entry. And then the next candlestick showed a perfect setup. So what happened? Another retest of the session low, rejection, a very nice, strong, bullish green candle, and it closed above both of the EMAs. Only by a pip, like a pip or two, but it's valid. So I took a long here. We have a stop loss here, and what happened? There was nothing to see here. It's just empty space because few candlesticks later, boom, a pretty aggressive red candlestick that took me out, and it's a loss. Okay, next up, it's another successful trade, a pretty good one, a beautiful one. This could be a break-even position as well. Depends on your management if you apply the rule or not to move your stop loss to break even. But what happened here? We have a session high, session low is not relevant in this trade, so there is nothing to see there. So we had a London session opening, a few candlesticks straight to the session high. Retest, breakout. This is a breakout closed above with the body closure. Next candlestick, retest, no short signal because we are not below the EMAs. And then next candle, a nice green bullish candlestick. What happened here? Once again, all three elements are respected. We rejected, or we actually retested the session high and showed continuation. So in a way, it's not a rejection, but yeah, I mean, we took out the session high, retest, continuation candlestick, nice strong bullish candle, and closed above both of the EMAs. Yeah, EMAs are here, our candle closure is here, all valid. So we took this long. I took a bit of a higher stop loss. Ideally, it would be somewhere here, but I just wanted it to be below EMAs just in case they get retested, and they did right here, but it's still a pretty safe position. So what happened? We moved to the upside. We almost achieved our take profit area, to be honest, and maybe even on some brokers, depending on the spread size, this could be a take profit. But then what happened? We showed some retest, rejection. It completely reversed, retested the Asian session high once again, and then reversed once again and went straight into the take profit area. So yeah, it's a pretty interesting position. It took a while to fulfill, but it's a valid one. And we have two more. This one was a loss. Yeah, it's a loss. So what happened here? Session low, session high, and London session opening. This candle boom, retest. This candle boom, retest, and this candle boom short. And this is exactly once again what I'm saying. Okay, this is not the perfect entry. As you can see, I took these similar setups before on January, and they both been successful, but this one is not. Yes, this is a nice red candle. Yes, it's below the EMAs. Yes, it came after the retest of the session high rejection, but it's not actually touching, or it's not super near the session high itself. So it's the same setup. I took it, but it's been pretty consolidative, and then eventually took me out. This candlestick for a short position was way better because it's almost at a session high. This would be a super nice valid short as well. But the same thing would have happened. It's a stop loss, and there is nothing you can do about it. I mean, for the rest of and this kind of setups are the most annoying ones, because for the most time your position is in a loss and you just see it consolidating next to your stop loss, and it's pretty annoying psychologically, I would say. Yeah, I mean, I wouldn't mind this thing to happen somewhere here when you are in a solid profit and you are able to wait it out, but when it happens next to your stop loss, it's a pretty annoying thing. But yeah, it's just one of the trades. It's a loss, and we have the last one for a profit. Yep, on a 20 on a 30th, I believe. It's been a pretty nice position. We had a session low, session high, London session opening, retest, breakout. This is a breakout candle. These two, a retest, a retest again, and then we had a nice strong continuation. This is not a short because we are not below the EMAs, and this is a nice strong bullish candlestick. So once again, all three aspects are met. We are break, retest, continuation. This is the candle. We are strong, nice green bullish candle, and we closed above both of the EMAs. Beautiful long position. So we took it, and it went fairly quickly all the way to the take profit, and it's a pretty decent position. And also I marked this chart because I believe it's something important I wanted to mention. Look at this. Look how messy and look how bad this looks. The whole Asian session was just a complete mess, as you can see. A lot of spikes and wicks, which is not ideal. It creates this extremely difficult environment to trade. And even though right here we had a short signal, right here we got a long signal, it's a mixed signal chart, I wouldn't take this short or this long simply because of how messy the chart is. Sometimes it's better to avoid the position rather than take it as a robot. Yeah, yes, this is the entry, short. No, I mean, it's a valid entry because we have right here, it's a break below the session low. Right here, it's kind of a retest. Right here is another continuation candle, strong red candle below the EMAs, below the session low. But just seeing these wicks right here, these two wicks, these wicks, and all of the mess right here is just not the greatest, you know. I mean, it's the same as, yes, you are able to drive when the weather conditions are super bad. It's like raining, thunderstorm, maybe even like a small tornado is happening. Yeah, I mean, you can go ahead and drive somewhere, but you will prefer not to because it's not the safest place. Yeah, so sorry, the same thing applies here. I mean, the chart or like the weather, yeah, it's bad, it's unpredictable, it's super messy. So I would prefer to wait it out, to stay safe in this case, and just wait for the better conditions. Maybe check other currency pairs or wait for tomorrow. Yeah, the market won't go anywhere, so there is no rush. Okay, so that's, yeah, it's a good example on when you have such an unpredictable conditions, it's better to simply wait it out, because even if you took the short here, most likely your stop loss would be somewhere here, so it most likely you will be stopped out. If you bought here, stop loss somewhere here, you may seem happy, here, but then boom, a reversal. It's unpredictable in these conditions when you see a chart like this. So it's just simply better to wait it out. So yeah, that's the month of January. I explained quite a few trades. I believe it's becoming more and more clear how we actually execute into the positions. So let's continue on the next months, and I will see you guys later on. Bye bye.